Hello, I'm Donald Leggett, and welcome to the latest London South East CEO interview. I'm joined today by Alasdair Haynes, the CEO and founder of Aquis Exchange, who have recently purchased NEX. Welcome, Alasdair.
Thank you very much indeed.
I understand it's your first day back in the office. How's it gone?
Oh, it is. It's good. It's good to be back. I had suffered COVID, so I've been through some of the horrible experiences. So it is really nice to be fit, well, and healthy and back in the office.
We're delighted to have you back. I'm not delighted to hear that you've been struck down by COVID.
Well, yes, unfortunately, I mean, it is a terrible thing. And the only bit of advice I can give any viewer to this is do what the government says and be very careful. You do not want to go through this experience.
I'm sure that's true. Now, to business. Perhaps the best place to start would be to get you to explain how Aquis Exchange, an exchange for small and micro-cap businesses, is going to be different from all its predecessors.
Right. I think the first point I'll make there is you mentioned microcap. I think we're not just a microcap business, and that's very different. We want to make a lot of changes here. I think first thing we're looking at doing is raising the standards. It's very important also to make quite certain that there's segregation within stocks. You know, a stock that is valued at 10 million market cap trades very differently to a stock that trades at 100 million market cap, and one which is maybe a billion. And the listing requirements should actually be different for each of those, and the trading mechanisms need to be different for each of those. And that's exactly what we're doing. Is we're implementing a new set of rules that will raise standards, make things easier, and in effect cheaper for people to come to marketplace and protect retail investors. We're bringing all sorts of rules that will actually protect not only the issuer but the investor, and make this a safe and good place for people to come and invest.
Now, here we go. It's a slightly obvious question, but doesn't AIM already exist, and doesn't AIM already do that?
Well, I think what you need in a market is strong competition. And what we've seen over the last 50 years, and AIM has been in existence for 25 years, a steady decline in the number of companies coming to market. And that really is a very, very bad news. Small companies, the best growth for retail investors comes in small growth and value companies. So you need strong competition. And frankly, there hasn't been strong competition over the last 20 years or so. So what we are doing is bringing competition to the market, but differentiating ourselves. That is so important, that you don't do the same thing as somebody else, but try and do it cheaper. You've got to differentiate and show that you're doing something way, way more better for the future, fit for the future. And markets have changed so much over the last 25 years. And we are positioning ourselves as a market for the future, so that companies can find it easy to come and list with us and raise capital, which is obviously the main reason why the capital markets exist in the first place.
Sure, listings are what it's all about. Let me just say that Aquis is the latest iteration, but there have been lots of them. NEX, plus markets, changing names and changing owners tell their own story, I think. I would say it might be hard to change habits in the cynical city of London. Was there a problem? Partly, I think running an exchange wasn't core to their business.
This is absolutely right. It wasn't core to their business. I think you've summed it up well. But it's more than just that. Its predecessor, which was the NEX market sold to CME, its core business wasn't equities. Our core business is about equities. It is about technology. It is about innovation. So this is a really, really core investment for us. But in the past, you can look back and say the strategy hasn't really been executed particularly well. There wasn't enough differentiation, which I talked about earlier. And I think that's one of the things that people will find very, very different with us now, is we're looking at something that really will help companies raise the capital that they need. And never has there been a more important time than right now, during this COVID pandemic, for companies to look for capital and get it efficiently and quickly and easily. And the public markets should be the first port of call, not the last port of call.
So how are you to plan to shake all that up? Shake up small cap fundraising, shake up listings? Tell us more. That's exactly what I want to know about.
Well, the first thing is we've segregated the market now into three different segments. We've got the access market, which is for companies that are probably less than 10 million market cap. They have a different mechanism for listing, so they use an admissions document. The regulation is slightly lighter. They're not going to be forced to have a corporate governance code. Their free float can be smaller. But companies, they start small. Great companies start small, they grow, and they mature. And as they grow, they must have that ability to be able to move to a next market. and that's the apex market. And the apex market is there for companies that are greater than 10 million, probably somewhere between 30 to 100 million, and then will grow from there. Now, they are going to have to sign up to a corporate governance code. They are going to have bigger free floats. They are going to have a prospectus. And what is important about the growth prospectus is we think by templating and using technology, we're going to be able to get companies at a cheaper price than probably today's admissions document to have access to retail investment flow. And retail investment flow is critical in any IPO. And we think it's really important that the retail investor should be allowed to invest in these fast-growing, small-cap, entrepreneurial businesses. We also are looking to protect the investor, which I mentioned earlier. So we're banning the short selling of these stocks to particular funds that just want to decide that they don't like it's a fund, it's a stock, it's in the wrong segment, it's in the wrong place at the time. An entrepreneur misses their number by 1/4 or 1/2, and all of a sudden somebody's allowed to sell their stock short. We're banning that because we don't think that allows the growth of the company, and it damages business.
Are you banning that across all the tiers of the exchange?
It's going to be across the growth market, which is the access and the apex tier. Once you move into our main market, which is the direct competitor of the London Stock Exchange, as in the main market, then actually you are allowed to sell short, and these rules won't apply. And it's the same as, if you plant a plant, you don't go and prune it straight away. You don't go and cut all the fruit off it. You have to fertilize it, you have to feed it, you have to give it water and everything else. And that's what is needed by entrepreneurs. They need that ability and that protection to go out and do what they say they're going to do. And retail investors need to be able to buy that stock, knowing it's safe and knowing that stock, it's their choice whether they sell their shareholding, because they are the shareholders of the company, not somebody who goes out and sells it short.
Okay, talking about companies, I interviewed the Solent boss, Nicholas Nelson, recently. His company's listed on Aquis. You'd be delighted to hear he loves Aquis.
I'm very pleased to hear that.
Indeed. He says that in his personal experience, the problem lies with Nomads. Nomads only ever recommend AIM, don't talk about Aquis, and, so how do you actually change such ingrained habits from Nomads? That's a problem.
Well, that is a challenge for us, but I think it's a challenge that's surmountable. And the reason behind that is that Nomads, of course, get an annual fee for being the Nomad. And of course, they want that. So they're obviously going to support an exchange like AIM. However, the responsibility of the Nomad, because of the regulatory environment we're in, gets more and more. And what we've discovered is a number of Nomads would actually like to reduce that responsibility. Now, as an exchange, we are the regulator of the companies that come and list on the growth market. And therefore, we are the regulator. We can take over a lot of that responsibility. And what we want to do is create an exchange where the issuer, the advisor, and the exchange all have a relationship together.
Why would you do that, though, Alasdair?
Is
there any money in that for you, though, Alasdair?
Sorry?
Is there any money in that for you, though, Alasdair? Why would you take on that extra responsibility?
Yes, there is money, because the monetization of an exchange is not done by its listing fees. It is because in the future, I believe we will have hundreds of companies listed on this. Now, that is very valuable data. It is also the possibility of creating small cap growth type indices, things that we can go out and provide for the market cost effectively for the fund manager and for the retail investor. And that is how you monetize the exchange business. Coming in here and trying to cheapen exchange fees is not the way to do this in the future.
So it's not about cheap.
No, it's not. I mean, I come from a long Scottish background, and to me, it's about being canny, but also getting more for less. More for less is very attractive. And if using technology, using innovation, and it really does change the way that people think. So you can have human behavioral change by innovating, using technology, and being transparent. And those are the things that investors want. And if you do that, you can dramatically get a better result at a cheaper price. The technology innovation in the primary market over the last 25 years is appalling, considering during that time, the mobile phone has been invented, and smartphones, and all the things that one can do. So we're very much looking to use technology, use that innovation to get a better primary market.
Let me turn you to liquidity. Liquidity is always an issue for stock exchanges. How are you going to raise liquidity on Aquis Exchange?
Well, again, that is down to technology. I mean, our business, our main business, the Aquis Exchange, we already have 20% of all the liquidity of the large caps and mid caps in Europe. That makes us the 7th largest exchange itself after a matter of years. And we've done that by creating new technology and by being, again, I'll go back to the words of innovative. We can create rules, we can create auctions, we can create different processes for different segments. In the junior segment, the access segment, where you're starting, where you're learning your business, you're learning how to be public, it will be a different set of trading rules and obligations than in the apex market, which will have a very much more competitive market making. And we think by incentivizing market makers to narrow spreads, get greater liquidity, is a better way of actually getting primary business to prove that we can get better secondary trading and deeper liquidity pools.
Okay, let me ask you this one. This is a question I've taken from someone senior who spent many years advising quoted companies. He says, and I quote, lots of companies quoted on NEX had very little share turnover and the managements didn't seem to care. Do you still want those companies, or will they be, in his words, booted off?
Look, we're not going to boot off anybody from our exchange.
Shame, it sounds fun.
I don't understand a management that doesn't want to have liquidity in their underlying stock. And the reason behind that is the two reasons you really float is to have a currency to do transactions so you can build your business, and a motivation for your staff. And if you don't have that, then actually you lose your staff and you haven't the ability to grow. I think if people are not prepared to adhere to the very clear rules that we're setting, and that's exactly what we're doing, being as transparent as possible. If people don't want to be transparent, then we have an issue. There will be an issue, and obviously then they will not be able to list with us. And I think that is important, that we are very, very choosy and careful to make certain that the standards here are raising. Because again, I come back to the point, we want to protect the investors and we want to help companies grow. And I think that's one of the things that we don't find today in the public markets.
And might there be some specialization? For example, one of the Canadian exchanges has become the go-to place for cannabis companies, as an example. Would that appeal to you, Alasdair?
No, not at all. We're not looking for specialization. We already have 16 different segments of the industry covered within the NEX Exchange when we purchased it. I don't think we need to be a broad church. We do not need to be a narrow church here. I think it's really important that the coverage that we have just expands and allows us to grow. Biotech companies, we've got pharma companies, we have got cannabis companies. In fact, I think the only cannabis companies are listed currently on the Aquis Stock Exchange. But also, we've recently IPO'd an engineering company. British Honey Company came in as a gin company. We've got lots of people, the Chapel Down, Shepherd Neames, Adnams, the drinks businesses, they all list with us. So I think, these are household names across a wide number of industries, and that's what we want.
How will you keep investors better informed about your companies?
Well, again, that's something else which I think is going to differentiate us from the London Stock Exchange, and the AIM system with the Nomad. Companies need to use PR. They need to get their branding and message out. We want to help and we want to work. As a company that recently listed ourselves, and we will at some point be able to, when we can, bring our stock over onto our own exchange, we learned a huge amount. And part of that is the absolute importance of having retail, making certain that the retail are informed about the business that we do, and having better PR. And therefore, that's what we need to do. Work with these companies and not just have a Nomad suggest to them, but work with the exchange, and we'll help them.
Retail investors often get left out of placings and fundraisings because potentially they're seen as too much effort. And yet, effectively, they set the share price on a daily basis, as I understand it. So how will you deal with retail investors?
Well, I think the most important thing for retail investors is connectivity, information, and transparency. And the fact that they have knowledge that this is a reliable and safe environment to come to trade the stocks that are listed on our exchange. And today, the connectivity is pretty appalling. The technology has been pretty bad. We need to work very closely. And as a fintech company ourselves, as one of our success stories has been able to enhance connectivity and get better access for people. I want your viewers to be able to pick up their phones, pick up their smartphone, deal with their broker, and access any stock, get any piece of information on any stock that's listed on the Aquis Stock Exchange, and be able to trade.
will you be actively encouraging companies to include retail investors in their fundraising and their placing?
Absolutely, we will. The reason we're bringing the growth prospectus as a compulsory thing for listing on the Apex segment of the growth market is the fact it immediately allows IPO during the IPO, the retail during the IPO itself. And if I'd had my time again, that is something which would have been so helpful to Aquis, because the retail market, people talk about being uninformed. It's just not true. The retail market is a huge, huge amount of capital available with people with varying views that allows liquidity and allows greater trading in secondary markets. And that's something that I think is essential. And I think the secondary trading enhances primary. So we're very, very keen on getting retail flow into IPOs.
That's absolutely fascinating. Okay, I found that answer very interesting. My final question, where will Aquis Exchange be in 2 years' time? Will you have been able to change those ingrained habits?
Look, I think we can. I mean, it's an arrogant statement, but we've had a very good and strong track record in the past of changing human behavior. We've been a disruptor in financial services for a very, very long time. I believe that Aquis can have hundreds of companies listed on it. I think there are literally thousands of companies across Europe today that are searching for capital. I think we need to be very competitive and differentiate ourselves. And we need to build a market that is, as I said before, fit for the future and is absolutely there to protect issuers and to protect investors. And I think once you've got confidence and you build that confidence and you build that trust with people, then actually we will see this thing really escalate. It is a very meaningful purchase for us. And therefore, we're going to spend a lot of time and effort making certain that this works. And I believe we have every chance of success.
And there's nothing wrong with having complete self-belief and self-confidence in your own business model. That's not a problem as far as I'm concerned, Alasdair. Thanks very much indeed for speaking to us there, Alasdair. It was absolutely fascinating. I learned so much. For more interviews like this one, please subscribe to the London South East YouTube channel. And my final thought, thank you so much for watching, and do stay safe.